Hey everyone, I wanted to update you on the latest developments with ARM Holdings stock, what's been going on lately at the company, its progress in its major initiatives, and then I also wanted to update my recommendation for ARM Holdings stock, whether or not it's a buy, hold, or a sell. I'll do all of that in this video, so let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so ARM Holdings just completed its first fiscal year as a public company. The company's been around for a long time, a couple of decades, but this was its first year as a public company. And in the fourth quarter, revenue jumped 47% year over year. And that's been a function of its increased research and development investment to capture this huge opportunity in all things AI. ARM Holdings has been one of the prime beneficiaries of the rising effectiveness of artificial intelligence as companies ramp up capabilities in delivering AI opportunities. So ARM is benefiting from that. And what they're seeing is the acceleration of the transition between its V8 to V9 product, the V9 product being the latest generation. And this drives not only better royalties for ARM Holdings, but also they're seeing more CPUs inside the chip, which compounds that royalty growth really across all end markets. So not only is the price per unit higher for the V9 versus the V8, but also these newer CPUs, these newer chips are having more CPUs inside the chip. So a greater quantity and a greater price per unit for ARM Holdings in the transition between the V8 to the V9, which is really good news for the company. And as they say, it compounds that royalty growth really across all end markets. But the smartphone markets is really its primary market. That's where it has a strong presence, but it's expanding beyond that. The company says that they only expect to continue to increase. And it's trying to diversify away from just being so focused on smartphones. And Google is the latest hyperscaler, which announced their Axion processor, which is based on ARM custom chip that is intended for the data center. So Google, being one of the bigger cloud service providers, using an ARM based custom chip intended for its data center. So as this ramps up, ARM Holdings can get a greater market share in the data center, perhaps attracting similar investments from other hyperscale companies, maybe AWS, maybe Microsoft. So it continues to expand beyond smartphones. They also announced their very first autonomous solution based on the V9. This is significant because they're now bringing the V9 performance to the automotive sector with enhanced features such as functional safety. And they expect huge growth around this area. Now, the automotive sector has been one that's been increasing the number of chips per vehicle, increasing the capabilities inside the vehicles, the computational, the electronics, all of which is increasing in cars. And of course, if the industry is going to move towards autonomous driving, then that's going to need a lot more computing power to achieve that goal. It needs to be able to understand its surroundings, make decisions in real time, collect data very quickly and rapidly, and that's going to require significantly more computing power, all of which would be good news for ARM Holdings. Now, it's trying to develop this new strategy where it's building a total compute subsystem so that its customers can just have a holistic solution all in one. And these are basically taking blocks of intellectual property, putting them together into a full solution, which gets verified and validated, and that saves customers huge time to market and also gives them a highly performant solution. So it's more of an all in one, here you go, buy it and take it, instead of putting together all of these different components for their buyers. This provides them a service putting it all together all at once, and that part of its business is also gaining traction. Now, all of this excellent development is the reason why on May 8th, I upgraded ARM Holdings stock to a borderline buy. Prior to this, I had ARM Holdings stock rated as a hold, and I upgraded it one notch to borderline buy on May 8th. I'll update this recommendation in this video, letting you know if I'm upgrading it even further or keeping it in the same area. ARM Holdings saying that a more exciting standpoint is that they're oversubscribed on this compute subsystem strategy. So they've got more demand than they have room available to sell this product, and that's great news. They have far more demand for the product than anticipated, and they're anticipating growing that significantly over time. Wow, these are strong performance indicators from ARM management. Not only are they seeing more demand than anticipated, they are oversubscribed, and they see this as growing significantly over time. Not just growing, but growing significantly over time. Now, ARM has the largest installed base of CPUs on the planet and has over 70% of the world's population using those CPUs. And all AI workloads rely and run on ARM, and they only see this increasing. Their licensing activity is probably the best proxy for that. So ARM has found itself in an advantageous position to benefit from this growing effectiveness of artificial intelligence as more and more businesses want to implement greater and greater computing capabilities. They want to be able to execute on their stores of data, utilize them for intelligible insights, and ARM Holdings will benefit from that trend. They're already benefiting from that trend, and the conversations they're having with their customers only indicates to them that it's going to be only increasing over time. Now, the only reason I hadn't already upgraded ARM Holdings stock to a clear buy is because of the valuation. It was, when I upgraded it to the borderline, it was trading a little bit lower. It's been rising ever since the company announced this latest quarterly earnings results, and it's now up to a forward price to earnings of 57. Now, earlier in the year, when it was trading at a forward price to earnings of close to 100, that's when I told investors not to buy the stock. It was too expensive. Of course, it has excellent prospects going forward, but much of that was already priced into the valuation. And regardless of how good a company is, it won't make a good investment if you're paying too high a price for it. So that's what led me to hesitate before recommending the stock as a buy. So given that its current valuation is still relatively elevated at a forward price to earnings of 57, to update my recommendation of ARM Holdings stock, I'm keeping it here on the borderline of a buy and a hold. So company has excellent prospects, but the valuation, a forward price to earnings of 57, is a little bit rich. It's accounting for much of those excellent prospects already. I don't think it's a terrible idea to buy the stock at current prices. I also don't think that it's a slam dunk at current valuations. It's a fair value. It's a good investment. It's not a great investment opportunity. As you can see, I have other stocks rated as higher ranking than ARM Holdings right now, and that's primarily due to the expensive valuation. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.